is showing about Sprint stock. Click search that in Google, click enter, and then you can see the full name of the stock. The symbol is S in Nasdaq, and it's, if I want to buy it right now, I have to pay $6.66 for one stock. The market cap is in billions, so it's a big size firm. It doesn't pay any dividend. Companies that pay dividend, that means they're financially strong, because after paying their creditors, loans, liabilities, they still have extra money. That extra money they pay to shareholders as dividends. This firm don't pay any dividend. There could be many reasons. Maybe it's not financially strong, or maybe it has extra money left, but it chooses to reinvest in its own firm to expand further. So you have to search that. Let's go to Wikipedia and see when was this founded. It's founded in 1986, 33 years ago. Let's see what the employees have to say about it. I'll just copy this exactly from Google, paste it here. Indeed, reviews, enter, and let's see what people have to say. So we have like 10,000 reviews and 3.7 star. You can go through the pros and cons yourself, what people have to say, and the salaries they're paying, the photos, and the jobs listed. And let's have a look in Glassdoor, which is a brilliant website as well for reviews. And I want to see, so it tells me there are 7,800 reviews and it's 3.2 star. Just read through the pros and cons yourself. Check out the salaries they're paying, the jobs listed, the interview questions, the benefits they're giving, and the photos of the firm. Let's go to just see a patent and see if it has any patents or not. So I will just paste exactly from Google, and please concentrate on assignee or applicant, because these are people who have full rights of the patent. I just want to make sure that is this the same one as we are looking at? Is this the same company? And I'll just go to images and let's have a look. Sprint, I think that's the same one, but I'm not really sure exactly. As Sprint Corp, I'm not sure. Acquisition of US Sprint, yes, I think it's the same. It's part of it maybe. So I think it's part of it, yes. So it has patent in 1985. 1985. It has previous patents, and that's the one we're looking at. I think Sprint International Communications Corp. That's the yes, that's the one we're looking at in 1990. So it has patents. You can just go through it yourself and look for recent patents in 2015, 16, 17, 18, because that means they're still innovating. So just go through the list yourself, and let's go to Yahoo Finance and see if it has the key executives and their salaries shown. So let's have a look. And so don't get confused. Just click on the symbol of the Nasdaq S and go to profile, and then you can just have a look at the sector, industry, employees. And the brilliant news is they have 5 key executives and all of their salaries have been shown, so we can see all the salaries, so it's very transparent. That's brilliant. Now let's go to macro trend, and I want to see the ratios. What I'll do is I'll just click price ratio, price book ratio, and type in S and then space, and then I can see Sprint. Now if price book ratio is less than 1, that means stock is cheap, undervalued, and at discount. If price book ratio is more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. So let's see, after it loads, let's see how it goes. Okay, so I'm looking for, let's have a look. It's 1.06, which means somebody who buys the stock right now will be paying 1.06 times more money. So it's 1.06 times more expensive. In 2013 June, it's 4.26, which means it's 4.26 times more expensive. Somebody who bought in 2013 June paid $7 to buy something that was $1.65 worth, so it was quite expensive. In 2008 December, it's a discount. Somebody who bought that time got nearly 75% discount because they paid $1.83 to buy something that was $6.97 worth. It was a discount. Right now it's 1.06, a little bit more expensive. Let's have a look at other ratios, and I want to check out the current ratio. If the current ratio is less than 1, that means stock is risky, the liabilities are more than assets. If the current ratio is 1.5 or more than that, that means stock is safe, it has a good margin of safety. Let's have a look. Let's wait for it to load. Okay, right now it's 1.06, it's less than 1.5. I'm looking for 1.5 or more than that for it to be safe. It's a risky stock. Let's look at the previous trend. Has it ever been 1.5 or more than that? Yes, it has, but just once or twice, or twice I think, and then just once more. Yes, so it's like mainly like since 2006 March up till now, it has always been less than 1.5, so it's a risky stock. Let's look at a debt equity ratio. This ratio will tell me if the company is mainly operating on debt or equity. I'm looking for zero point 0.5 or less than that. Right now it's a lot more than zero point 0.5. It is a risky stock in terms of debt. Let's see, has it ever been zero point 0.5 or less than that? So I can see that only from 2005 September up till 2007 September, it's less than zero point 0.5, so it's a safe stock. But since 2008 March up till now, since recent, like I would say 11 years, it's a very risky stock because it has always been above zero point 0.5. Let's go to return on equity. I'm looking for 8% and more than that for it to be brilliant. Let's have a look once it's loaded. Okay, so I'm looking for 8% or more than it is less than 8%, so that's a risky, like I mean that's not a good return, it's a minus return. And let's look, so it has been more than 8% in between, and then it's minus again, a lot of minuses, a lot of minuses. So that's not what I'm looking for. There's no consistency. It has been above 8% in 2018, but now it's still in a minus equity. That's not what I'm looking for.